Fund Supermart, your online gateway to unit trusts.
Hi, what is the general outlook for European equity?
So we're positive on the general outlook for European equity, and the recent pullback does represent a good opportunity to invest in our opinion. I think you have to consider the positive impacts of the European Central Bank's quantitative easing programme. I think you also need to look at the recovery we're seeing both in terms of the European consumer, but also in terms of the European industrial economy. At the same time, these two are combining to see some very positive earnings growth outlooks for European corporates. They're benefiting obviously from a much weaker and much more competitive euro-dollar. And finally, for European corporates, they do offer a significant yield advantage. European corporates pay one of the highest yields available in the developed world.
Should investors be cautious when investing in European equities? What are the risks involved when investing in them?
Equity investments are designed to be long-term investments, and so there should be a certain element of caution around that. Certainly the recent volatility around the Greek scenario, around the resolution to the Greek debt crisis, means that investors should probably be cautious. Against that, we are positive on European equities, but at the same time there are some sectors whose valuations have got extended, and investors would do well to be cautious about those.
Why should investors consider investing in European equity with a focus on income at this time?
Investing in European equity for income has many advantages at the present time. I think the first one is the yield itself. Europe offers the highest yield of pretty much any developed market in the world at the present time. And as Europe recovers, you're also beginning to see the potential for dividend growth, and that's something that will play very, very well for most investors. The dividend reliability of European equities has also increased significantly over time, and that's something that benefits investors whether they're looking for a distributing income or something that's going to accumulate over time and compound up to give them long-term investment returns.
What factors does the team consider when picking companies for the portfolio?
When we look at inclusion of companies in the portfolio, we focus very much on the cash element. It's all about cash returns. Dividends must be paid in cash, they must be reliable. We therefore spend an awful lot of time looking through free cash flow metrics, assessing the reliability of that dividend and making sure that we are 100% confident that that dividend will be paid. We're therefore looking for companies that have solid, reliable income streams, that have very sound, very cash-rich balance sheets. We're looking for companies that have very good corporate governance and financial discipline, and we're looking for companies that enjoy characteristics like strong barriers to entry and excellent free cash flow generation.
Are there any specific areas within European equities that you currently favour at the moment?
So with an income perspective for European equities, there are certain sectors we certainly like the look of. The insurance sector for us has done very well of late. It combines companies which have repaired their balance sheets, which have accreted excess cash on those balance sheets, and they've repaid that to shareholders in the form of special dividends. That's been quite positive. At the same time, we've done very well this year. We've made significant money for our clients in the real estate sector, which has benefited from negative real interest rates. Moving forward, certainly within the consumer discretionary space, there are some media companies which offer very good prospects for dividend growth and have significant operations in the United States, and that's likely to benefit from a weaker euro-dollar as well.